Imagine this. One morning, your neighbor knocks on your door. He's smiling from ear to ear. "Hey," he says, "I finally decided to sell my house." You look surprised. "This is the best house in the neighborhood. You've always said you'll never sell it." He laughs. "Exactly. That's why everyone wants to buy it." Within hours, buyers start lining up outside. People are fighting over the house. Some even offer more than the asking price. Now pause for a second. Before joining the crowd, wouldn't you ask one simple question? Why is the owner selling something he says is so valuable? That single question has saved investors billions of dollars throughout history. And today, it might save you too. Because right now, some of the biggest technology companies on Earth are preparing to sell pieces of themselves to the public. Many people see this as the opportunity of a lifetime. I see something different. I see a warning sign. Let's understand why. Whenever you buy a stock, someone else is selling it. That sounds obvious. But most people never stop to think about what it actually means, especially during an IPO. The people selling aren't random strangers. They're the founders, the first employees, and the venture capital investors. These are the people who built the company from day one. Nobody understands the business better than they do. They've seen financial reports you'll never see. They know every strength. They know every weakness. And after knowing all of that, they're choosing cash instead of more shares. So the real question isn't, should I buy? It's, why are they selling? History gives us the answer. Let's travel back to 1999. The internet was changing the world. Every day a new technology company went public. People believed these companies would make them rich forever. In fact, more than half of all companies going public that year were technology businesses. Everyone wanted in. Then, reality arrived. The dot-com bubble burst. The Nasdaq lost more than 75% of its value. Around $5 trillion disappeared. Many of those exciting companies simply vanished. Researchers later found that only about 29% of those fast-growing companies were still independent businesses 10 years later. The dream looked incredible. Reality looked very different. Then, history repeated itself, this time with SPACs. Instead of traditional IPOs, companies found a shortcut. A SPAC was basically an empty company that raised money first and searched for a business later. People called them blank check companies. Investors poured money into them. In 2021 alone, over 600 SPACs raised more than $160 billion. Wall Street called it the future. But only a short time later, many of those companies lost more than half their value. The excitement disappeared almost overnight. Different name, same story. Now we arrive at today's biggest trend, artificial intelligence. There's no question AI is changing the world, but there's another question very few people ask. Is the money being earned anywhere close to the money being spent? The answer is shocking. This year, the world's biggest technology companies are expected to spend around $725 billion building AI infrastructure. Think about that. That's roughly $2 billion every single day, about $83 million every hour, and more than $23,000 every second. Those numbers are almost impossible to imagine. But here's the bigger surprise. Researchers estimate the entire AI industry generated only about $110 billion in annual revenue, not profit, revenue. In simple terms, the industry is spending far more than it's earning. Imagine opening a restaurant. You spend $725,000 building it. At the end of the year, you only make $110,000 in sales. Would you call that a great business? Probably not. Even businesses using AI aren't seeing the huge benefits many expected. A Deloitte survey found that while most companies hoped AI would increase revenue, only a small percentage actually experienced meaningful growth. Researchers from MIT studied hundreds of real AI projects. Most produced little or no measurable financial return. That doesn't mean AI is useless. It simply means expectations have become much bigger than today's results. Now let's talk about one company everyone knows, OpenAI, the company behind ChatGPT. Reports suggest OpenAI generated around $13 billion in revenue. Sounds impressive, but the company also reported enormous losses. Its valuation reached around $852 billion, more than 65 times annual revenue. That's an incredibly high price. Could OpenAI become one of the greatest companies ever built? But today's stock price, or future IPO price, doesn't just assume success. It assumes near perfection, and perfection is very difficult to achieve. This reminds me of one famous moment before the 2008 financial crisis. Charles Prince, then CEO of Citigroup, was asked why banks kept taking huge risks, even though the market looked dangerous. His answer became legendary. He basically said, "As long as the music is playing, you've got to keep dancing." He knew the party wouldn't last forever. He just hoped someone else would be left standing when it ended. That's exactly how bubbles work. Nobody believes they'll be the last buyer until they are. So, does this mean AI is fake? Not at all. Does it mean every AI company will fail? Of course not. AI may transform the world over the next several decades, but a great technology doesn't automatically make a great investment. Sometimes the technology succeeds, while investors still lose money because they paid too much. That's happened many times throughout history, with railroads, the internet, and electric vehicles, and it could happen again. So let's go back to our neighbor. If someone tells you their house is the greatest investment ever, but they're rushing to sell it, don't ignore that. Ask why. Because in investing, price matters just as much as quality. The smartest investors don't simply buy great businesses. They buy great businesses at reasonable prices. The market will eventually separate excitement from reality. Nobody knows exactly when. Not me, not Wall Street, not anyone on YouTube. But you don't need to predict the exact day. You simply need to recognize when optimism has become louder than the facts. Because when the music finally stops, you don't want to be the last person left on the dance floor. If you enjoyed this breakdown, subscribe to Mr. Whyzer, where every week we turn complicated money topics into simple stories that help you become a smarter investor.